What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 12th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about hedging yourself and preparing for the next few months as we could experience what's known as a second wave. This has been an increasing topic of discussion on a topic that I think we're all pretty tired of by now, but it is important to keep in mind, and that is the spread of COVID and the continued relevancy it has on the world stage, on where economic growth is going and where asset markets are going. So we're going to be talking about all that and more. Let's just go ahead and dive straight into it. And some of you might notice the mic quality might be a little bit better or worse. I just set up a new mic setting where the mic is a little bit closer to my mouth. It's on a proper stand, and we've got a pop filter. So if it sounds good, definitely let me know your feedback down below in the comments if I'm speaking too loud, too low, etc. So anyways, let's go ahead and dive right into it. So the major thing that I wanted to talk about here today, guys, is diving directly into cryptocurrency markets. One thing that we've seen is the recent bump up in crypto markets over the last week or so, where the price action going from around $10,500 up to where we're at now, around $11,271 on Bitcoin, and also for Ethereum coming down here from around $340 towards $367. Now, I actually tweeted out just the other day, and I think this has probably been my biggest tweet so far, where I basically tweeted out to Elon Musk asking him if they would do what Square Payments had done. As many of you know, the news that drove Bitcoin and Ethereum's price was Square, one of the major payment processor companies in the United States, founded by Jack Dorsey, who also founded Twitter, ironically enough. It basically went and bought $50 million for the Bitcoin to kind of diversify their balance sheet, to hedge themselves against inflation, etc. Well, I tweeted out to Elon Musk asking, seeing as he's worked at PayPal and also Tesla, I'm curious if in this case he would basically build any kind of crypto position, whether it be Bitcoin or other digital assets, with his $5.1 billion in cash reserves at the company. And again, a lot of people are like, Tesla's using this money, it's doing all these things. And of course, Tesla's going to use the majority of its cash for real business operations. That's the same with Square or any other company. But the idea that, a company like Tesla, couldn't position $50, $100, $200 million into something like digital assets, it's not a far out idea. So sadly, we have not gotten a response from him yet, but we did get a lot of community support and interest around the question, right? This has been a very big topic, and I think this is going to continue to drive Bitcoin and other digital assets higher, not just because, we want to get in on the action of Bitcoin going up, but that price benefit that you can get being in an asset that's non-correlated like Bitcoin is going to give you the protection against the inflation and also potential negative interest rates that could become a reality here in the near future. And that's what I want to talk about today, guys. It kind of goes hand in hand, monetary policy, a second wave of COVID, and also the potential hedges cryptocurrencies could provide. There's not much technical analysis we need to do here in the short term, guys. Anyone who's telling you something's going to happen in the next week or so that you need to know about, they're completely selling you on something to distract you in that case and to get you to click on their video, right? What we're here to talk about is the macro perspective of what's really going on. And what's going on right now is what looks like it's going to be the second wave of COVID-19. Now, again, I know a lot of people have a lot of different despairing opinions on COVID-19. Some think that it's the end of the world and we need to take it very serious. Some people think as well that it's not really a big deal and that we really shouldn't be worrying about it. And the problem is that people's personal opinions, whether one side or the other is right, it doesn't really matter. It can tend to cloud people's judgment when they're making smart decisions when it comes to investing in the market. Because what we need to do is we need to interpret, okay, how is the global population, and more specifically financial markets, how are they going to react to this? Where is money going to move from? It's not about our opinions. It's about the reaction of the broader market. If you want to be on the winning side of the trade, if you want to hedge yourself properly and secure your financial, your financial protective, I'm kind of stumbling, I guess, on the terminology I want to use. If you want to protect yourself financially, right, and you want to hedge properly, you need to know what the markets are going to do. That's the simple, clean-cut answer that I always give to people. So putting aside our personal opinions, right, Let's just go ahead and talk about what a second wave is. Well, a second wave is, many of you probably might already guess, it's no worries if you can't. It's basically the secondary wave of COVID cases that we're going to see across the globe. Now, the US, in many terms, has already had its second wave. We had our first bump, and then after that, we continued to climb up in cases. We're now starting to set in lower lows and lower highs, generally speaking. But in other parts of the world, we are starting to see a second wave, predominantly in the UK and Europe. So we can see here, again, central banks have still been on their printing binge to compensate for the lockdowns that we had during the first wave and during the pain that we're feeling in the second wave as well. But globally speaking, case numbers had been flatlining throughout the later part of the summer and are now starting to climb up again. A lot of this coming not only from India and Brazil and a lot of other areas still maintaining their high number of cases, but we also have Germany coming very close back to its all-time highs, looking like it's going to surpass those levels. France, in this case, very big tourist destination, originally peaking out at 7,500 cases back here in March 31st of 2020, now setting a new peak here of daily cases nearly around 27,000. We have Italy as well. One of the hot spots here for cases coming back up to its all-time highs. And along with that as well, the UK spiking up here to new highs around 23,000 cases on October 4th, starting to dwindle down a little bit. With one of the worst areas on a per person basis, on a per million residents basis, Israel having a major spike here back in September. So again, to dive into this here, right, guys, there's a lot that we can learn from these situations as we take a look at kind of the worst case scenarios. We can ask, what's different about these areas? What are we doing in the sense of testing procedures? And outside of that as well, what are the different mechanisms that we're utilizing to fight COVID, or steps that we're taking or lack thereof in these different areas, right? Now, it's important as well to understand that we can't rule out one specific country or certain areas. It can be a bit misleading. So I think it's, again, important. I was reading a Twitter thread here from back on October 7th that talked about what Israel was doing and what kind of mistakes they'd made. And also, we've obviously seen, criticisms of other different countries across the globe, such as Brazil, the US, European Union, India, right? But all in all, just putting this aside, guys, right? These kind of individual countries, analyzing it, I think we're going to continue to learn how to actually react to this over the next few months. It takes a lot of time to get everyone on the same page. Some people, again, when it comes to the controversy of this, we'll talk about one way or the other being the best. I want to talk about really the real substance here. And the question is whether or not there's going to be more lockdowns across the globe. That is the major thing we have to think about. Yes, there's going to be either way, there are going to be massive repercussions health-wise. We've already been hearing a lot of negative stories that there are some long-term symptoms of COVID, but a lot of people again make the argument that we just kind of have to get through it, right? So again, putting aside our approaches on it, the question here at the end of the day is, are we going to get lockdowns? Well, the one thing that you won't notice if you just look at the case numbers here for COVID, as much as there is probably going to be long-term medical ramifications for people who get COVID, for at least a decent group of people. As much as the total cases are starting to hit all-time highs here, around 350,000, total deaths have actually started to level out in a sense. We've started to learn how to deal with COVID, at least in the severe cases that require ICU beds, in this case, for people going to intensive care units. Right back here in April, for example, back in March and April, we were starting to see the real spike in death cases for COVID. This was back, again, when New York was kind of the hot spot. The U.S. was really the center of attention. In this case, we've actually started to kind of flatline here. Now, not to say that this isn't a catastrophe here. It's sad to see a lot of these deaths in the world. At the same time, seeing the flattening here is a really good sign that we're going to start to probably dwindle down, if not maintain ourselves during a second wave, which is actually really good news comparative to the hypothetical situation that deaths would be rising. And we can see this looking at individual countries. Take a look at Germany here. If we jump from new cases to deaths are relatively non-existent with the spike, right? You wouldn't even be able to tell that we're having a second wave if you're looking here at the deaths in Germany. Taking a look at France here, right? Deaths relatively low, nowhere near where they were back in April, even though if we take a look back at the cases are far beyond that. Taking a look here at Italy, right? This was, again, a hotbed for deaths here in Europe, as it has a lot of elderly population. And taking a look here, 26 deaths per day. Taking a look here at the UK, new spike in cases well beyond double of their peak back in April and March. Deaths nowhere near where they used to be. And Israel as well. Taking a look at deaths here, right? Spiking up here to new highs, but at the same time, if we take a look at the case divergence here, we had 796 cases with a peak here around 9,000, a tenfold increase in cases and not too much more deaths in this case. So what does this tell us overall here with COVID? To just try to take it in a non-biased approach here. In communities in this case where there are decent medical care systems, people are being able to be treated, right? So again, we've kind of dived into these cases enough in this case. The thing that I take away from it here is that I think many governments across the world, though they are going to take measures as we're stepping into vaccines being available and options and different treatments being available so that there is something to opt into if you want to take it and kind of protect yourself and go about your normal day-to-day life and you don't want to just risk just going on towards herd immunity in that case, then in that case there's going to be those options soon enough. But I do feel that in some pockets of the world, we are going to see a secondary lockdown. And above all, whether we see a secondary lockdown, the ramifications of the previous lockdown and the slowdown in the overall economy and consumer confidence, shopping, going around doing the things we did before is going to push central banks to continue pressing up these central bank balance sheets. And they're going to push interest rates down negative, as we've already seen the UK getting very confident of through the Bank of England. We've already seen the Bank of Japan doing this for a long time. Many European countries going into negative interest rates and their bond yields going negative. In this case, we have to have a bit of a target range to go for. And I think that it's very realistic that we could see total central bank balance sheet assets between the People's Bank of China, the Bank of Japan, ECB, and the Fed. This isn't even including the Bank of England, the other central banks across the world in Latin America and Southeast Asia. I believe we are going to see this index alone here and the first half of 2021 go past beyond $30 trillion. And it's really not that far away from where we're at right now. It's just going to be a continued climb here into mid-2021. I think we're going to see an even further acceleration as central bank additions to the balance sheet have kind of slowed down here and pushed a little bit more sideways. I think the Fed is going to play catch up here. I think the Bank of Japan is going to keep moving up. The People's Bank of China, which has been relatively stagnant, at least to the current day that we have, I think it's all going to pick up. Now, if we're talking about a world of $30 trillion in cash on the balance sheet of these banks, this is going to be a very substantial increase, even far beyond what we've already had in regards to the overall, cash in the economy, the inflation, and the depreciation of local currencies. And this is where, again, I think that not only stocks, not only bonds, and along with that as well, other types of assets such as properties are going to do well. But I think it's going to continue to bode well for an environment for Bitcoin and Ethereum. I really do believe this, guys. Again, it's going to take some time to build this asset class out. Don't expect these things to happen overnight for certain. I want that point to be very clear. But again, the case right now, it's not that I'm celebrating what's going on right now. It's a terrible thing, right? I think COVID is something that can affect all of us in one way or another, whether directly medically or through someone else dying from it or someone getting harmed by it long term. But it's a serious topic and discussion we need to have about preparing ourselves financially. If central banks are going to have to take this monetary response, and some people would argue that it's necessary to stimulate the economy. That's what central banks are claiming that they're meant for, right? Well, if that's the case, we need to protect our wealth in this matter. We need to make sure we protect ourselves against these side effects of monetary policy or the symptoms of monetary policy. But anyways, I'd like to hear what you all think. Again, I'm not claiming here in this case that the world is going to rush to Bitcoin and Ethereum. Again, a lot of people are going to tell you that. It's a lie. It's not the asset that everyone's going to go to right away. It's something that's going to take multiple years. And that's why, if we take a look at the long-term chart here for Bitcoin as a summary here, I've always talked about just looking at the long-term chart, right, that we are going to have a long-term process here for Bitcoin. My peak estimate is going to be here in November to December of 2022. So we've got a ways to go before we get to that point here for Bitcoin and other digital assets. But I think it's coming. I think we're on the process of it. We're exactly where we should be here, and we're going to continue to finish off that climb here over the next few years. So again, whether it's a 5, 10, 15, 20%, or larger exposure than that, depends on your risk profile. Again, I've got a good exposure to cryptocurrencies, and I recommend everyone at least look into cryptocurrencies. You have to determine for yourself if you're ready to make that investment. All right, everyone, that's it for today's video. I'm curious to hear your thoughts down below. Again, putting aside the more kind of like opinionated side of things in regards to COVID, I want to hear what you think it's going to do for digital assets. Do you think it's going to be a non-event for crypto? It might even be a negative in some people's perspectives. But I'm curious to hear if you think it's going to be positive or negative. And what do you think the second wave is going to look like? Do you think we're peaking out here soon? Or do you think it's going to continue to grow over the next few months? I'm interested to hear from you all. And that being said, everyone, I hope you're having a fantastic day wherever you are. And I'll see you all in the next video. Take care, everyone.